Hey guys, what's up? Alec back with the daily stock market, and we went over how Friday was a green day for individual stocks. Rivian up 14%, Alibaba up 8%. But in this video, what we're going to be talking about is the three best stocks under $10 per share. Now, I know you guys love stocks that are very cheap and under $10 per share, so let's jump right into it. Just smash a like on this video, subscribe with post notifications on, and share this video with a friend. So the first stock that we're going to be talking about is NEO stock at $9.98. It just made the cutoff of $10 per share stocks. Now it is up 30% in the past month. Remember, it was closer to $7 per share, and under $8 per share is the place I like to buy NEO the best, especially for swing trades and shorter trades. However, if you're a long-term investor, I think dollar cost averaging in anything under $12 per share is going to help you out for long term. NEO is still a stock that I'm not going to say it can get to new all-time highs again anytime soon, because that would be a 500% gain, and NEO would have to do a lot of work and deliveries and net income growth and revenue growth to actually get back to that $50 stock price once again. However, for NEO to get back to, $15 per share, even $20 per share is a very feasible thing that could definitely happen if we start seeing the growth from them that we want in the second half of 2023 and into 2024. Okay, so we could do a deep dive on this one. Keep in mind, this is a Chinese-based stock again, so it is a little bit more risky, but it offers a good hedge against American-based EV vehicles like Tesla or Lucid or Rivian. If you're heavy in those kind of investments already, then it could be a good idea to at least put some money into a stock like NEO. Here we can see the market cap is 17.68 billion. PE ratio is negative. If we scroll down, we can see that the EPS has been trending downward, but it's getting close to profitability. And what we really want to see from NEO at this point is a profitable quarter. Now, we are going to dive into NEO's income statement and the balance sheet, but remember, the biggest risk when investing into something like NEO is that Tesla can come and just squash them like a bug. There's no guarantee that Tesla will have a stranglehold over the Chinese EV market, especially if the government has anything to do about it. The Chinese government will not allow a US-based stock to dominate the EV market. So investing in something like NEO could be a good hedge, like we were saying. Here we could see the net income annual chart. 2022 was by far its worst and most unprofitable year, negative 14 billion. Wow. So that's obviously why the stock is down significantly. Quarter over quarter, it's not getting much better, because the most recent 2 quarters, they lost 5 billion and then 4 billion. So they're on track to lose again 15 to 20 billion if they keep up this losing pace. Okay, so it's very hard to see that and invest in a stock like this. Just remember, it's extremely high risk. And anytime you're dealing with any stocks under $10 per share, by the way, the risk goes up tremendously. Okay, keep that in mind. I'll say it again because it's that important. Anytime you're dealing with a stock under $10 per share, the risk goes up tremendously compared to other stocks. Okay, and we want to see that net income bouncing back here to negative 2 billion, negative 1 billion per quarter. That will be huge. The total revenue, let's look at a yearly chart first. We can see that it is going up around 100%, 122%, and then most recently only a 36% gain. So the total revenue is there. It's just the net income they really have to get figured out. On the total revenue on a quarterly chart, we can see that they were as high as 16 billion in Q4 2022, and that tapered off to only 10 billion in Q1 2023. So total revenue is less important to look at for a company like NEO. We really want to focus on net income and seeing that net income get closer to profitability. The balance sheet is also extremely concerning, because just in 1 year, they went from 57% debt to asset ratio, and now they're closer to 73% debt to asset ratio, meaning that their debts are catching up extremely quick to their assets. Here you can see the assets are represented by the blue bar, and the liabilities are represented by the purple bar. Okay, and it's not getting much better. On an annual chart, we can see in 2020 they were as low as 41%. So if you are dollar cost averaging into Neo or just wanting to play them for long term, we really want to see that debt to asset ratio get closer to that 60% range. So overall, Neo is extremely risky, but they are a good hedge against something like Tesla. If you have a lot of money in something like Tesla, okay, for the Chinese electrical vehicle market. Now, again, under $8 per share, even under $7 per share, waiting to new all-time lows might be the best thing to do, or just dollar cost averaging into Neo over the next 6 to 12 months could also prove beneficial, because as they drop, your average cost for the stock will get lower if you're just dollar cost averaging in instead of trying to buy a lump sum all at one time. Dollar cost averaging in is typically going to be the best way, especially for a risky stock like Neo. It's almost impossible to time these extremely risky stocks. But if you are going to try to time it, I would wait for around $6 per share, $7 per share. And then other than that, dollar cost averaging in under $12 per share could prove beneficial. However, it is highly risky and not financial advice. Keep in mind. The next stock that we're going to be talking about today is only at $2.19 per share. So you can load up 100 shares of Fubo TV for only $200, $219. Okay, so that's why it is attractive, and that's why it made the list. It's also very interesting. We're starting to see some momentum, positive momentum behind the stock, because they're up 7.8% just in one day, 18% in the past week, with big downswings and upswings in between. So getting this one closer to $1.75 could prove beneficial. We can also see Fubo TV is up 99% in the past 3 months. So there is a good chance that you can get this one under $2 per share and closer to $1.50 if you are patient and set your price alerts. So that's why setting price alerts are so important and powerful, because if you set your price alert around $1.25 and forget about Fubo stock for a while and then come back and you're notified Fubo stock is at $1.25, and then you buy it and you write it up to $3, for example, that could be a huge percent gainer. Now, the all-time high for Fubo TV is $50 per share. It's actually $48 per share, but close enough. Okay, if we could see a new all-time high, that would be extreme growth from a stock like Fubo TV. Remember, they IPO'd in 2020 in October at $12 per share. They're closer to $2 per share. If you don't know what they are, they're kind of like the Netflix for sports. Okay, it's all about sports. Sports first. Live TV streaming company. The firm focused on offering subscribers access to tens of thousands of live sporting events annually, as well as news and entertainment content. Its platform, Fubo TV, allows customers to access content through streaming devices on smart TVs, blah, 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 just like Netflix. Okay. Market cap is 632 million. So this is one of the smaller stocks that we've talked about in a while. 600 million market cap. It's under 1 billion. So there's a lot of room for growth on this one, and you could easily get in early. And if Fubo TV makes it big and they become the next Netflix or the next big streaming platform, this stock could easily 10x, which would be an 1,000% gain or even more. Possibly. Okay, we can see that they are getting towards profitability, with the last 3 quarters getting closer and inching closer to profitability as well. Okay, so here we have Fubo TV's income statement pulled up, and we can see in 2020 they were highly unprofitable, negative 600 million in net income. That's what obviously led the stock down from their IPO price. And they never really recovered. In 2022, they're at still 400 million negative. If we go to a quarterly graph, however, we can see 2 quarters ago in 2022 Q4, they were as close to profitability as they've ever been, only losing 15 million in that one quarter. So there's signs of growth here, which is extremely promising and important to look at, because if they could get to profitability, and if their unprofitable days are behind them, then this stock can grow tremendous amounts. Now, the revenue is what people are really looking at for this stock, and it's extremely attractive, because look at that quarter over quarter growth on revenue. 100% gain, 60% gain, 40, 30, 30 again, just going up consistently. If we look at an annual chart, the same thing applies. Okay, in 2019, they basically did nothing. In 2020, they grew 5,000%. And then in 2021, they continued to grow 200%, and then all the way to 1 billion in total revenue. So this is why this is an extremely attractive stock at $2.18 per share. Okay, and if you can get in under $1.50, it's even more attractive. But this one can definitely explode if they get that net income in the check, because the total revenue is looking great. It's a great growth story. It's a growth stock at its finest. It's an unprofitable stock, but it is promising. Okay, if we scroll down to the balance sheet, not the best thing going on. In 2020, we have a 27% debt to asset ratio. That grew to 51%, and now it's 68. So we don't want to see that continued climbing on their liabilities. Obviously, we want to see that closer to 50%, 60%, but 68% and 70%, that's getting pretty high if it continues to grow on the debt to asset ratio. So overall, this is an extremely risky stock that you should be using extreme caution with, but there is some great growth potential to be had, and there could be a great growth story behind this stock. And getting in early could prove extremely beneficial. Even if we're only going to go to IPO prices around $12 per share, that would be a 600% gain. Okay, so I would be extremely happy if Fubo TV just went to $5, $6, even $10 per share. Those are some of my personal goals for a swing trade on Fubo TV, for a risky swing trade. And I briefly want to talk about Snapchat stock. Even though they are above $10 per share, just slightly, they could easily fall under $10 per share, next month or next week. So that's why they're making their video. Also, they're making the video because Meta Platforms is on absolute fire right now, up around, let's actually just double check. Meta, they're up around 200% in the last few months. Okay, so if we look at the last 6 to 8 months, we can see they're up 219%. And if we go over to Snapchat and look at what's going on, we really see 0% growth in the last 6 to 8 months. Okay, so I'm not saying that Snapchat could fly up just because Meta did, but something to watch out for is, remember what Meta just did was Threads. They basically made a clone of Twitter. Now, what if Snapchat does something similar, but they make a clone of Instagram or a clone of YouTube or a clone of Twitter, and they say you can bring all your followers over from Snapchat onto this clone of YouTube or clone of Twitter? That could be a bullish thing, and obviously I'm not saying it could push the stock to new all-time highs of $83 per share, but it could definitely bring the stock back alive. And if we see something like Meta rallying 200% over the last couple months, last 8 months I should say, then Snapchat, if they hit the nail on the head with this and they also get their net income in order, which they are, because look how close they are to profitability now. They're getting closer than ever to profitability. Then this stock could absolutely explode next. Now, obviously, this is an extremely risky stock, but they are at a not at a 5-year low, but they're getting close to a 5-year low, and they're around 2019 lows. So something to watch out for, something to have your eye at least focused on. I'm not saying that this is the best stock to buy right now. Maybe waiting for a sell-off closer to $8 per share, $9 per share could be better. But if Snapchat gets their stuff in order and does something like Meta just did, a clone of a different social media, it could be a bullish thing to propel Snapchat stock further and higher to around $20 per share, $30 per share. Now, overall, analysts do not like this stock, by the way. They have an average price target of $9.92 per share, so buying under $10 per share is definitely the best way to go. That would be a 15% drop from the current price of $11.68 per share. The lowest analyst has a $6.50 price target, and the highest analyst has a $19 price target. If we scroll down, we can see at where some of these analysts are coming from. Brian Fitzgerald from Wells Fargo reiterated a hold because he sees $10 per share in the next 12 months. He said that 25 days ago. Allen Gold says a $14 price target. And you can see some of these other top 25 analysts. They don't really reiterate too much on Snapchat. Obviously, Snapchat's not a stock that analysts are really diving into too much, so there's not too much to report on what analysts have to say about Snapchat. So I would definitely take this what you're seeing here, all the analyst price targets, with a grain of salt. Overall, Snapchat is extremely risky. Under $10 per share is the best place to be buying if you have an appetite for risk and an appetite for reward. There is a huge upside to have with Snapchat, but there's also lots of risks going on with Snapchat right now. But there's a good chance that Snapchat's going to figure it out. They seem like a dominant platform over the last 5 years, and they're probably going to continue to be a dominant platform, especially with the younger generation, which is an important thing to notice, because that younger generation that uses Snapchat, they're going to be growing up soon, and they're going to have more buying power and purchasing power. So Snapchat is a stock I want to do a deeper dive in on the future, just to see if there's anything exciting going on with them, because they could be a huge money maker in the future for lots of people. I mean, if they got to new all-time highs, that could be a 700% gain on the stock. Now, my favorite is Fubo TV for the risk and the reward, probably on this whole list, because they're $2 per share right now, and they could easily explode 100%, 200%, 300% in the next few months. But remember, this is not financial advice. These are just some of my own opinions and things that you should at least just keep your eye on. So thank you guys for all the love and support you show on every single video. If you want to join my private trading group, by the way, click on success number 8, click on success number 9, read through some of those positive testimonials. Now thousands of positive testimonials and thousands of positive earning students in our group at this time. You can chat with these students, of course, that have been making profits. We can see another $1,000 day before lunch. Feels amazing, with over 162% gain, $925. And we can see the month of June was absolutely spectacular for us. Lots of students making money. So if you want to figure out a way to generate some money from the stock market, if you want to learn to become a more advanced trader, message me here on Instagram at the Daily Stock Market. I'll shoot you over an application so you can see if we're a good fit for each other. And then after that, I'll shoot you over my website so you can actually look over it for yourself, see how much it costs, what all the offers are. And if it makes sense to you and if it's inside your budget, then let's go ahead and make some money in the stock market together, just like everyone else's. And now is a great time with the bull market back in cycle. It's a great month. May, June, and July have been great to us so far, so it is a perfect time to join. Thank you guys again for the love and support. Share this video with a friend because you know it was an absolute banger. As long as you keep liking these videos, I will keep making them for you, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.